Hi everyone, let's go through my medium time frame and new low time frame Elliott Wave scenarios on Bitcoin, starting with the medium time frame preferred scenario, where we are looking for an ABC 3-wave corrective structure to the downside, which then is a 5-3 5-wave move. Now if we then look at this green wave B, which then is this 3-wave move over here, either an ABC or a WXY, we are basically looking for potentially a bounce in this white target box over here, which is sitting between 27.6k and 27.2k, which includes a weekly. We have a triple bottom over here for some liquidity, also the range value area low of this whole range over here. And we also have the 1-to-1, as you can see, taken from the high to the low of W to the high of wave X. So there's quite some interesting confluence in and around this area for then potentially a move to the upside. And to potentially support this scenario, we do have bullish CVDs between the low over here, the low that we already made, and the current low. And the target for bullish CVDs is the highest high in between the divergence low. So basically the high over here at 30k is the target for the bullish divergences. And if I actually show you the divergences on the chart, we're currently on the 1 hour time frame, which is for the CVD divergences quite a high time frame actually. You can also see these divergences even on the 4 hour time frame. If I zoom out, you can clearly see we have a low over here. Price is making higher lows twice, this one and this one, but on the CVD chart it is creating lower lows. So higher lows on price, lower lows on the CVD chart, which is a bullish divergence, and the target for this bullish divergence is taking the high over here at about 30k. So that is definitely something to take into account for then also of course this potential long scenario. So price moved to the downside as it stands now in 3 waves, which is something we've been looking for, right? I mentioned that in previous videos as well. And we actually missed out on hitting the weekly. Like we wicked, yeah, quite low, but we actually didn't hit the weekly. We didn't hit the target box just yet. I think this bounce is mainly because we took this low over here, the low of this W at 27,664 for then a liquidity grab, and for now a little bit of a bounce to the upside. But I wouldn't mind another move to the downside, but we have to of course wait and see what price is gonna do. But we had the potential trading setup from this target box over here, where a long can be entered, stop loss somewhere safely below, better safe than sorry, for then a continuation to the upside. No financial advice, of course, based on Elliott Waves. And there's a risky and of course a safe strategy. Riskiest, price moves down, just enter and well, you know, see if it goes up, or wait for a little bit of support or structure or divergences or whatever your strategy is, but you have certain entry requirements, and if all the entry requirements are basically hit, that is the moment you enter the trade for then looking to the upside, right, for the long position, where the target box for this wave B, if we then continue from the lows over here to the high of the range basically, because honestly we're just in one big range, right, going up and down and up and down. And you know, you might have seen the rule where they say trade the range until it breaks. So basically, funny enough, this Elliott Wave potential trading setup and this scenario that we have in front of us is basically continuing the range till maybe, hopefully one day, it will break. So we have the target box over here of this wave B, which is quite big. The target box here is between 30k and 32.4k. And the reason it is so big is mainly because of this wave A over here. So the reason that this target box is big is because this can be both a potential 3-wave or a 5-wave structure. Now I prefer this to be a 5-wave move to the downside, and then a 1, 2, 3, 4, 5, followed by a 3-wave correction and then a 5-wave move to the downside in an ABC. The invalidation of this scenario is price taking the high of 31k. So if it does move up over here and it actually takes the high at 31k, this is invalidated for me as a bearish scenario 5-wave move to the downside and then a wave A, B, C, but we still have the bullish scenario, which I'll show you in a second. So if this is a 5-wave move, you do not want to see this wave B going above 31k for then the bearish scenario being an impulsive structure to the downside. However, this can then also potentially still be a 3-wave move, which is an alternative. So then you have a 3-wave over here, followed by potentially a 3-wave expanding flat, and then a move down in a wave C, which is then an A, B, C expanding flat. Not very likely, but it is something I have in mind, and I also don't have it as a separate scenario. It's just something to think about. Or it can be a W Then you have a 3-wave in a wave X that can take the high at 31k, and then you get a 3-wave move in eventually a wave Y to the downside, and that is more of a ranging structure in general. So that is also something to keep into account, but those scenarios are not on my chart yet. They're just you know, something to think about in my mind at the moment. So yeah, that's why the reason why the target box is quite big, but the triple top, in my opinion, would be a very big target for then the potential long scenario over here, where we also have the blue target box sitting between 30.2k and 30.4k for then potentially the same thing, but then eventually to the downside, where we have a couple of target boxes down here, but those will be mentioned in more detail the moment that we actually have a bit more clarity of price potentially moving to the downside. If we then look at the bullish scenario, now in the morning video, price didn't yet take this low over here. By all means, by the way, the bullish scenario is definitely an alternative scenario for me and not preferred, but you always need a bullish one. So we had the potential 1 and then like a 1, 2, and then another 1, 2. Now this is invalidated because price took the low over here, and if this is a 1, 2, 1, 2, the wave 2 is not allowed to take the low of the origin of wave 1, so that invalidates a potential 1, 2, 1, 2 scenario. But in a bullish scenario, it does not yet invalidate that this is a wave 1. This somehow is then a 3-wave in a wave 2, where the 886, I have it on my chart, which also has already been tapped once. It is a very deep target for a wave 2 and also a very rare target for a wave 2. A 886 hit is more common for a wave B than for a wave 2. So if price is going to go down, I mean, it already hit the 886 once. So this whole bullish scenario is literally an alternative one. But yeah, again, you need something, right? At least in Elliott Waves as an alternative, but one trades the preferred one till it is invalidated, and then we look at other scenarios. So yeah, the bullish setup basically means that this was a 3-wave ABC, which is then an expanding flat scenario, where this wave B is extremely high compared to then the length and the price length, also the deepness of this wave A. But yeah, in this scenario, this is then an ABC expanding flat, looking for 1, 2, and further upside. But again, very unlikely in my opinion. If we then go to the lower time frames and actually go to some more likely stuff, we have the move to the downside. So we had this range to the upside first, right? And then a WXYXZ to the upside, where now we've been looking for downside. In this particular scenario, we then have a zigzag in A, followed up by a wave B, and then a zigzag in a wave C to the downside. Now this wave B can either end over here or end over here. It doesn't really matter too much, but in an ABC scenario, either or works, and the target area for this wave C is in between, or at least most commonly, in between the 1 and the 1.236, which has hit over here, and on the 1 hour also very, very nicely respected. As you can see, a wick inside this target area, while at the same time simultaneously taking these lows for at least a little bit of a reaction at the moment. But of course, price can continue falling a little bit further as well, because if we look at the target box that I have, you can see the target box, the wide big one on the medium time frame, is a bit bigger than the small one of this wave C. And I mentioned that this is the most common target for a wave C, but the rare target for a wave C is still the 1.618, which is at a much lower level. Let's actually change this quickly. Poof, lock scales are there. A much lower level, which is all the way down here, actually even below this low, as you can see, and also far below the wide target box on the medium time frame that we have. Here's the 1.618. So price could, of course, reverse in this area for then upside if we think about this potential preferred scenario. But it can also dip down below the 1.236, maybe take some liquidity off the triple bottom, hitting the 886 as well, and then eventually reverse to the upside, right? That's also possible. And if we then look at another scenario that I have, which is a bit potentially more bearish, but it also changes the medium time frame count. We are potentially thinking this is an impulse to the downside, and then a wave 1, 2, then another 1, 2, 3, 4, 5, which then finishes the blue 3, then the blue 4, and then we have a blue 5. So this is then an impulsive structure to the downside, and if this is an impulsive structure, it basically means that this has to be an impulsive structure, which is actually quite likely also with the other scenario, by the way. But this is then a wave A followed by a wave B in a WXYXZ, and then eventually you have this as a wave C to the downside. So this then creates an ABC, which then means that on the higher time frame from this move to the downside, it's then a WXY. And as you can see, just by looking at the chart, it does not look very nice. This wave W is incredibly short. Wave X is already very long compared to W. And then this wave Y over here is even longer than this wave X. So it's not necessarily too likely, but it is a scenario to keep in mind. And as you can see, if I switch on the medium time frame bearish scenario, the preferred one, here we go, you can see that in this particular scenario, basically wave W is here. So we are then thinking about this being a three-wave structure. Then we have X, and then this being its own three-wave structure to the downside, instead of with this scenario, this being the first, second, and then this being a whole third structure. So, but nonetheless, something to keep in mind in case price is going to drop impulsively. And the main reason I actually thought of potentially showing this scenario in the video is because of the volume. So we have this move to the downside, which counts much better as a three-wave than a five-wave structure, by the way, this one over here. So that also makes it a bit less likely this is a wave one, but volume is increasing a little bit. You can especially see over here a bit of a volume spike. So we do have a bit of an increasement in volume. It kind of went down already, like this was a high volume move, but this move to the downside was kind of like non-existent compared to this bigger move, right? Yeah, volume increased a little bit, but it's definitely slowing down, right? So that is potentially more bullish for eventually at least a bit of a bounce or a bit of a range to come. And if we then finally look at the news, because there is news this week, then on Wednesday, 2:30 p.m. Central East European time, check your own time zone on this website, not affiliated by the way. We have some red flags, which means high impact news, which means for me volatility, because I have no idea what this is. And then also on Thursday at 2:30 p.m. Central East European time, we have some high impact news as well with some stuff going on, which can create volatility. So whatever you do around these hours, which is the reason I have a vertical line with an alarm, the moment the time hits of this first news over here on Wednesday, the news 2:30 p.m., I immediately know, hey, volatility might kick in. So with my trading, I have to watch out and make sure I have a very good plan for the potential volatility coming up. Now, I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video that I made yesterday if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye-bye.